managerial accounting for business decision making. That's where we are now. That's how the organization of all this managerial accounting is. Now, obviously, we're not going to go over that organization. We're going to have a different organization for the purpose of this course. First, we have to distinguish which are the future here. Managerial accounting is applicable to all type of businesses, all form of businesses. Helps the management to make those strategic decisions. And the users of managerial accounting can be people from the production, from the marketing, from engineering, from accounting, from everywhere across the organization. Comparison between managerial and financial accounting. The financial accounting that we just finished part is that the both dealing with the economic events and with the business. The difference is the managerial accounting focus on the future, where the financial accounting focus what's happened in the past and how we can better present it on the financial statements for the decision makers. There's based on the different futures, the difference between financial and managerial accounting based on the users. Financial reporting is for the outside users, where the managerial accounting for the inside users. How often we're going to have to prepare those reports? Financial reports we prepare either annual, either half year, either quarter, either month, and month is the shortest period that we have to prepare financial statements, where the managerial accounting as soon as possible. Purpose is the general purpose for the financial accounting and specific purpose for the managerial accounting. Managerial accounting is not concerned about the whole report of the company rather than parts of the company, like a product, like a division, like a customer. Content of the report is for the financial reporting. We care about the business as one unit, where in the managerial accounting, we're chasing detailed reports with detailed explanation about the different purposes that we're using those reports. Verification purposes, yes, financial reporting has to be verified, where the managerial accounting, we don't need independent audit, we don't need verification. In fact, we don't need standards. Now, managerial accounting has three functions. Obviously, the main purpose for those functions is the company to reach its goal. Now, the question is, what's the goal of the company? Once the company has a goal, then we can start with the three main responsibilities. There are more, but let's say that those three are planning, directing, and controlling. On the planning stage, we're gonna draw the future in terms of different options. On the planning stage, we're gonna select the options, alternative, which gonna bring us to the point that you want to be, or the point that we can reach our goal faster and more efficient. The key objective here is to add value to the business. Second function is directing. Directing again is for the purpose of company to reach the goal. So during the directing stage, we're going to make sure that the plan that was chosen and the path and alternative that has been chosen on the planning stage is followed. So again, we're going to chase the objective, which is on the planning stage, and we're going to make sure that those objectives are actually achieved. We're going to provide some motivation to the employee. We're going to train the employee, including the executive and supervisors, for only one reason: to achieve the goal. Controlling. On the controlling stage, we're going to start keeping track of where we are compared to our plan. On that will be, if we have to choose which is the most important stage, I would say all the three stages are important, since all of the stages help us to reach our goal. On the controlling stage, we can once you see the comparison between the actual and where your plan is, then you can start making some changes, what you have to do, what you to adjust in order to reach your goal. Again, everything is to reach your goal. Then we go into the company organization and how we can organize the company and what kind of structure we have to get for the company in order to achieve the goal, which was set up by the company. We're going to see that two type of positions involved in the company. One is the line position, the other one is the staff position. Staff position is the one that is actively involved and actively support either production, either the operating process inside the where the line position are directly involved in the decision making, and they're the one who step up and making decisions and deciding what to do or what not to do. So that's the typical organizational chart of the company, where it starts. Every company starts obviously with the shareholders. Shareholders the one that drive the capital. If you remember from the financial, that's why we need that financial reporting to see that the shareholder is the one that's investing in the company. What they're investing in, they're usually investing in cash, which cash later is converted into assets. So those assets provide the wealth in the company in terms of net income. Now the shareholders, in order to make sure that the company generate net income and they have earned their objectives, they're gonna appoint board of directors. Board of directors is gonna appoint the president and the chief executive officers, and then we're gonna have this decentralized structure when one person delegates the duties for all the other vice presidents, which on their hand delegate the duties to somebody else's. The whole point here is the corporation or the company to achieve the goal of the shareholders. Now, the organizational structure, again, the chief executive officer, he usually is the highest position in the office, and he's responsible to make a major corporate strategic decision. Again, he's the one who reports directly to the board of directors. The board of directors reporting to the shareholders, and the main point is to create value and wealth for the shareholders. Chief Financial Officer, Chief Executive Officer is the top. Then below we're going to see the Chief Financial Officer, which is responsible for the accounting. Now, which accounting? Is it going to be managerial accounting or financial accounting? Both. He'll be supported by controller and the treasurer. Controller will be responsible for the main accounting records for the internal control purposes and preparing the financial reports for the external users and management report for the internal users. Treasurer, the main point is to manage and control the cash positions in the company. Now let's see what you think about this question. The officer who is responsible for the all accounting and financial issue in the company, which will be the one.
CFO.
Obviously, Chief Financial Officer, that's correct. So where is the next Chief Financial Officer is the correct answer. Now, we're coming to the point that the good business is always involved with the good ethic. Now, the question is, what is ethic? Ethic is unwritten rules, or sometimes they're written, which define what's right and wrong, which are created by the society, that we're living in. Now, why the good ethic is always related to good business? Because of unethical behavior on certain individuals, we have so many financial world crises. Those are the ones that created the major corporate scandals in the past, and those are the ones who changed the world. In some cases, those scandals included people who are driven by their personal interest, other people as a board of director which not oversign the people that they appoint to do the things that they wanted to do in the first place. The people who have to confirm the financial results fail to do their job correctly, which are the auditors. Sometimes it may be suffering from the financial analysis. People who don't understand financial analysis and don't make the right decision, don't interpret the financial information correctly. Or sometimes it can be simply because the CFO decide to do some aggressive accounting policy in order to change the way the reports should look like. Anyway, all those actions create only one consequence: suffering of all the businesses and all the society. Now the result is greater the emphasis, and it's important of the ethical behavior in organization. So the role of the management accounting is very important in the organization. How are we going to create the proper incentives? Well, you as a manager, first you have to follow the ethical standards. Second, you have to find a way to motivate your people by creating a proper incentive through monitoring, evaluating the employee. That will be not to create overly ambitious budgets. You have to make the employee feel successful. You have to put effective and realistic control in order you to control your people and to make them feel engaged in the whole process. Otherwise, ineffective in a realistic control, it can decline the quality of the product, regardless, is it like a physical product or is the intellectual product. And don't forget, the good ethic is always adding the value to the company. In that case, we need a code of ethic and code of ethical standards. Now, usually all the ethical standards comes after something happened in the reality. After something goes wrong, then the people step back and try to see what went wrong, what can we do to prevent this not to happen again. Usually the people who are most hurt and in the higher position, they're the one who's stepping up and start taking those preventive actions in order. The funny part is they're doing this for only one reason: to make sure that they get more profits later in their life. But that's what drives the economy. That's why you want to be the managers, because you have goals, they also have goals, and they want to protect their goals. So for that reason, all those standards are created so they can be more strict accounting and reporting principles, managerial information to be accurate, and all the ethical standards in practice has to be implemented in the business, so the business to be more effective. The accounting body here in Canada, Chartered Professional Accountants, CPA in short, Also have a code of ethic, which is the provide the high sense. However, as a product of personal characters, it's acknowledged the individual that the standard is to observe. It goes beyond that. The simply confirming out of the letter of list of prohibitions. So always every standard is going to give you the rights, what you can do, and what you can, and prohibitions, what you cannot do. And if you do this, what's going to happen? If you do that, what's going to happen? So now let's see the corporate social responsibility. You as a manager, yes, you're responsible for the creating wealth to the shareholders, but you're also responsible for the society. And now we more and more start talking about the social responsibility. So what means that? We have to think about the other people, the future of the other people in terms of the place that we live in, the planet, and obviously for the goals of the shareholders, which is profit. I know profit here is given on the last on the line, but most likely the profit will be the top driven, the driver that's going to drive all the activity of the people in the company. So that means where the people in the planet are, well, you have to decide where that's going to be, because if there are no other people, there will be no support for you to generate more profits. And if we keep destroying our planet, there will be no place that we can spend our money. So let's see this, the triple bottom line, which one is not included here?
Plants.
Obviously plants. Do we have to include the plants? Is the question. Maybe later on we have to start including the plants as well because they're part of the planet. But since they're part of the planet, we can just say the planet and the plants are included in the planet. So now the management accounting today. Why do we need the management accounting today? Since most of the company, as you already see, moving to the services rather than production, we need the different information to those companies to be more successful. There are new operating control that has to be designed to improve the quality of the products. There are new technology that's coming, which are involved in the manufacturing company. So all those changes need somebody to step up and start managing. That's why we need the managerial accounting. That's why you studying this course. You to understand from where the money coming and how to control and manage the money in order to create value for the company and value for the customers. So the managerial accounting, which are the industry that managerial accounting is involved, and in which industries, you can find it in any industry all around you. In the transportation, in the delivery, in the telecommunication, in the professional services, in the financial institution, in the healthcare, all those, as you can see, those are service companies. Now, what we're going to do is from the service company, we can transfer it to the manufacturing company, we can transfer it to the merchandising company. And as you can see, in every different type of service, there are the different questions that has to be answered and solved by the management accountants, or the accountants that doing management, or the managers, which will be you. So we can put more businesses here. We can put sport franchising. You can put here entertainment business in terms of you can be accountant of Cirque du Soleil, and you still have to answer all those questions. Those will be different questions, of course, but you still have to answer those questions. So the managerial accounting has a lot of applications in a lot of industries. But the main thing is the industries are main type of industry: service, manufacturing, and merchandising. So all those three businesses, they're gonna need accountants and managers. Not only managers, but good managers. That comes to the point is what creates a value for the only element on the value chain that creates wealth to the company, which is the customer. I want you to clearly understand this, that the only option that you have to create more value for the company is to create value for the customer, which customer is going to pay for the product, for the services, or for the merchandising that you're providing. But in order they to find more value, you have to create more value for them. How can we create the value? Through the value chain. In every stage of this chain, we adding more value to something, which in the beginning we start with nothing, and at the end we have a product which is shipped to the customer and the customer can use it. So from where the value chain starts, in the beginning, again, there's nothing. We start with the research, which is the product that can change people's life or bring value to their life, which they're gonna use it one day for their own benefits. And they will be willing to pay to have that product. So we start our research. Then we development of the different products. Then we decide on the product design. Once we decide on the product design, we start the manufacturing. Once we said, okay, this product that's gonna change the human's life, and that's why the people is gonna pay us money, then we start the manufacturing cost or manufacturing process. Manufacturing process will be first we're gonna get our raw materials. After that, we're gonna start working on those raw materials to prepare the product. Once we have the product, we have to somehow to communicate with the people around us that we have a product that's going to change their life, for which they have to pay us money. We start ourselves in the marketing campaign. After we do the selling, when the customer is happy, he wants to have our product, he already pay us, we have to magically transfer that product from our warehouse to the people's hands. That's going to happen through delivery, either to the store where the customer has to go, or either directly to the customer's door. And after that, once we have that customers purchase the product from us, pay the product from us, we want to establish some kind of relationship and follow up with that customer, because we need that customer to come back again. So we're gonna provide customer service. And we're going to answer all the questions that the customer has about the product and how can he use better the product. So that's basically your value chain. Value chain, remember, is creating value for the customer on every stage of the value chain. That's why it's called value chain. And all those activities have only one objective: to provide service or to bring the product which has a value in the hands to the customer. Now, what else? What kind of technology we're gonna choose? We use in the managerial accounting. We can have this enterprise resource planning system, or we can have computer integrated manufacturing. So, enterprise resource planning system will be the system that holds all the information in the company, not only the accounting, but everything else, starting with the customer name, customer address, customer information, project related to the customer, if you're in the project company, uh, what kind of items that customers buying, what's the history, how often the customer pays, how much he pays, what's his credit limits, if there are any credit limits. That's on the customer side. Then we're going to have the same information about the vendors. And that information is going to go to one place, and from that place we're going to start creating different type of reports, which are going to help us again to provide value to our shareholders. And in short, the enterprise resource planning system is the software system that control and manage the value chain. Which value chain? The one that I explained before. The chain that creates value to the customers. The large company, that enterprise resource planning system, it have different modules and different packages inside. Computer integrated manufacturing is that's the process where most of the products are created without even using humans. Business to business, that's another. E-commerce, that will be the technology in terms of cutting the supply chain here. You see, the value chain is creating the product, which creates a value to the customers, where the supply chain is only on that side. Actually, the supply chain is on the end side when we sell in the product, and supply chain we can have it of the purchasing and gathering the raw materials which we need to create our product. Now the management accounting also improvement will be the just-in-time inventory system that help us to monitor our inventory for only one reason: we do not have too much inventory. Or in other hands, in other words, that will be the inventory that is directly related to our demands. We're not keeping more than our demands in our warehouse. But for that reason, we have to have a close relationship with the suppliers and with the customers. And that's how we can create more value to the suppliers and for the customers to make sure that delivery is on time and the quality of the product is achieved. Total quality management is another philosophy, and that philosophy is related to the producing products and our production line to have zero defects, which requires all the employee to be trained and to be communicated with them that this is our philosophy. They have to be bring on the line with the philosophy of the company. Then we have to prepare those timely reports of all the defective works, all the rework cost, all the warranty cost. And that will help us to redesign our products or our production system in order to reduce and eventually eliminate the defects that we have in our production line. Activity-based costing is another idea, which is very interesting idea. I believe I have to talk later more about activity-based costing once we see how we cost our products. But in brief, that will be idea that allocates cost only to the products based on what cost the product actually using, rather than just allocating cost to the product just because we have to allocate the cost. In this method, we're gonna allocate the overhead Now we start using terms which we haven't been introduced yet, but the overhead is some cost which is um, are related to the activity, which are not directly and cannot be only directly to the product, but more like a supporting activity. But we're still trying to allocate those activities to the cost of our products as long as the product needs those activities. So we're only trying to identify what's the actual activity that we need to perform in order to produce the product. And we're charging the cost only for those activities, not just applying the cost because we have the cost. In that case, you can actually see at the end of the process, you can see of the total cost that you're paying, how much is the cost that you're actually using. And that will help you to understand better the value chain and the activity that you need in the value chain in order to actually create value to the clients, and which activity in the value chain doesn't create the value, and respectively you can eliminate it through the value engineering process. Theory of constraints, it's another idea on the managerial accounting that we're going to use, and that is to identify and manage the constraints. Obviously, in our personal life, the only constraint or the only limited resource that we have, we already established, that's time. Because of that, since we have our limited resource, we have to organize our life in a way so we can take the maximum benefit of the limited resource that we have to achieve all the goals that we want to achieve within the time limit that we have. With this theory of the constraints, obviously we're trying to identify which are the bottlenecks or which are the limited resources which are going to hold us. Again, the whole idea is we to achieve our goals and objective faster and sooner rather than later. Lean manufacturing is another idea. Lean manufacturing is related to the level of manufacturing and achieving level of production, which is directly related to the demand. So the lean manufacturing is very much related to the just-in-time inventory system. So you can see that at some point you may see, if you go in the practice, that lean manufacturing is closely related to just-in-time inventory system. The goal is to eliminate the waste and concentrating to meeting the customer needs, which are measured by the customer demand. So we're gonna require from the supplier only the raw materials that we exactly need to satisfy our demand by producing the products which are directly related to our demand. We're not creating excess inventory. We don't create any wastage. We're focused on the efficiency and on the customer demand. Now, researchers find the 5 basic principles that are critical to that lean thinking process. First, we have to identify what's the value, what is the value, what is value, which one is valuable for you. Then we identify the value stream. Once we find the value stream, or which will be the path, then we make sure that this path flows actually. Then we're going to implement this pull system, and once we see how the whole process working, we try to achieve perfection. Again, by eliminating the wastage, become more efficient, try to address the customer needs, and focus on the customer demand. Balance scorecard is another idea which is used in managerial accounting. Balance scorecard we're going to see later, or maybe not. But anyway, the balance scorecard is performance measurement approach, which helps to evaluate operations, also gives you idea about the company strategy. In some other documents, you may find that the balance scorecard is the tool to express or to show the company strategy presented on the financial and non-financial measures. Which are the financial measures? We have four perspectives in the balance scorecard. First one is the financial, which is the only financial, and then we have three non-financial measures, which is the customer perspective, internal business process perspective, and learning and growth perspective. There's a link between all those three scorecard metrics, which the link is directly related to how what you learn transfer into improvement in the internal process, which create more value for the customers so they can buy more products. That's the link in the different between the perspectives of the balance scorecard. But again, everything starts with the learning and growth, then move to the internal business process. That internal business process is going to affect the customers, and the customer is the one that's going to bring you the financials. So let's see one question here. All activity associated with the providing a product to service is referred as a
the value chain.
That will be the value chain. And one more for you.
The first one, respond to customer demands.
B, aim for reduced defective units.
Right, that will be on the lean manufacturing. If we go back to the lean manufacturing, this is the one to define value, identify value stream, make sure the streams are actually flow, implement the pull system, and strive to perfection. So out of those 5, respond to the customer demands, that will be part of strive to perfection. And then identify the value stream and specify the value. That will be definitely, once you see value related to the lean manufacturing. So the only one is the aim to reduce the defective units. That's not one of the 5 principles. And that's with this chapter. I know it's a little dry chapter, more like a theory chapter, but anyway, we have to go through this one. And that's the end of this.